I want to go over a trade that I took today with you guys, just so you can get a better understanding of what I usually look for in the markets and why I take the trades that I do. Without further ado, let's get it. Let's go. So over here, we did create a new higher high. I'm gonna mark that up on the chart, but here's a trade that I took earlier. Well, as you can see right here, you can see that the market was basically playing within zones. It was playing within this particular area. And as you can see, we never broke past this area. So I figured as long as we don't break past this area, we should be good. We should see sellers momentum. Plus, as you can see, if you scroll back in the past, we did pick up sellers momentum here as well, right here, and over here for a little bit. So I figured, okay, sellers are probably still in control. So I waited until about 10 o'clock. I got into the trade right here. And I'm basically just going to tell you guys what I could have done better, just in terms of managing my trade and everything. So obviously my stop loss is 5 points. And then my take profit is always 15 points. So with that being said, I seen the market push down. So I basically had 3 confirmations for entering this trade. We had structure, not saying we were bearish because we weren't. As you can see, we're making higher highs, higher low, higher high, higher low, higher high, higher low. That's a higher high. And we didn't necessarily make a lower low. So I just wanted to scalp this and really see if I could catch at least 5-10 points at most. So we see in the market create a doji candle. So I wanted to see the market push down. Doji candles signal a higher potential of a reversal zone / a higher chance that the market can push down. I waited for this zone and I entered here at 10 o'clock. As you can see, the market did push down. We pushed down about 5 points and I should have exited the trade here. We came here, we created another indecisive candle and we consolidated for about 15 minutes. And then we had one more push down. I should have exited the trade right here. And I'm going to explain to you guys why. And then instead of me exiting, the trade did hit my stop loss, but it is definitely a lesson learned. So right here on the chart, I'm going to label it for you guys. And this is also something that I talked about in my previous video. So this is called an engulfing candle. Usually whenever you see this, it symbolizes that the trend or the sellers are no longer in control and there's a higher possibility chance, it works 70 to 80% of the time, that buyers will be in control instead. So we've seen an engulfing candle, also known as an imbalance in the market, which eventually will get filled. But we've seen an engulfing candle, and then after that, after the engulfing candle, we've seen the market continue to push up. So what I should have done was brought my trade to break even after we pushed down right here, or closed it, to be honest. After the engulfing candle, I should have closed it, took my $3 loss, or whatever the case would be, take my loss, call it quits, and then wait for the next setup, right? And honestly, I'm going to show you guys what the next setup would have been. Obviously, we would be looking for buys since we are continuing our uptrend and long position. I would have taken the trade right here after it came to my zone right here. You could take it right after the engulfing candle right here as well if you wanted to. But just to keep it simple, that's what I would have done. And then I would have risked 5 points to gain 15 points. So my stop loss would have been right here. And then my take profit would have been right up here. And this trade did take a bit longer. You would have gotten into the trade at 10:40, or I would have gotten into the trade at 10:40, and I would have gotten out of this trade by 11:45. So it did take a lot of time, but it's not that bad in retrospect. And yeah, that's pretty much it. That's what I would have done. And that's definitely what I will do going forward, because trading really and truly is just about being able to see your losses and also being able to cut your losses short, and just know that you won't always be right, but at the same time, you have to understand that when you're wrong, you're wrong. And it's better to cut losses short than lose the whole trade if you don't need to, if that makes sense. So, but yeah, it's just me because I didn't really see it fully happening. Like I seen it, but I didn't really take in that was what was happening. So yeah, that's pretty much it. Hopefully you guys like this video. Hopefully you gain something from it and you can use this in your trading in the future. And I'll see you guys in the next one. Peace.